Welcome back to the currency space then, and the risk appetite waned across the board with rupee trading largely choppy against the dollar, but the Indian unit closed the day higher after the euro rebound a bit, pushing the dollar lower. All eyes now are on the Jackson Hole meeting over the weekend, where the markets are expecting Bernanke to give some output or some hint on to further stimulus there. To know more about the currency space, we are now joined with us Dominic Bunning, who is Associate Forex Strategist at HSBC. Also Pramit Brahmbhatt, who is CEO Alpari Forex Now, joins us. Pramit, let's start with you. And what's your reading into the Indian rupee now? Because we've seen 2 days of a continuous decline. The closing, of course, has been slightly marginally on the higher side, but we really have been making lower lows on the charts.
Right. What we have seen here is that the equity market is choppy, doing a consolidation after the gains, and that has been reflected in the rupee. Also, we have seen the demand coming from oil importer month-end demand, so that has created a pressure on rupee. If we look globally, euro had a good run, and that should have reflected in the rupee, but the domestic factor has hold on the rupee at this point of time.
Sure. Dominic, let me get you in the conversation as well. The Asian currencies in the recent days have seen strength on stimulus hope coming in from the central banks, especially US. Which one do you think has more positives going for it?
I think at the moment our key favourite currencies in Asia are those with the strongest external surpluses, and also where FX policy is maybe showing a slight acceptance of currency strength. And in that regard, we do still like the Malaysian ringgit, we like the Singapore dollar, and we like the Korean won. We think all of those currencies have both structurally strong inflows, but also a constructive FX policy framework as well.
Dominic, also, how have you seen the Indian rupee as it trades under pressure from the political scenario in India and delay in the financial reforms?
Well, clearly the rupee has been under some pressure for a while now, and that does come from its relatively weaker backdrop, given its twin deficits, the current account and the budget deficit. I think, from our perspective, given how much the rupee has weakened, there are actually some risks now that the market is almost looking for too much further weakness now. And while we are relatively bearish, we're certainly very cognizant of the risks that policy could start to gain more traction in the future, and as and when that happens, we could certainly start to see the outlook for the rupee become more positive. So while we retain a relatively bearish stance on the currency, we're certainly going to be monitoring the political situation to see how those reforms do come through.
Yeah. Vijay, what's your sense coming on the charts for the Indian rupee now? Because we have seen a decline on Friday, and today we just about, we did see levels like 55.88 into the spot markets there. Are you looking at a further decline? What kind of a trade would you want to initiate tomorrow?
Manisha, tomorrow the rupee might just get a little more volatile because of the expiry on the NSE's August series. And since August is now expiring, we would discuss the September series. September series is closed at 55.92. There is a cost of carry built into the price, and I think over the next 2 trading sessions that cost of carry is likely to get eroded. So while I do expect the rupee to basically go past the 56 levels, that is more of a factor of cost of carry and rollovers, I don't think it's likely to go past 56.20 or 56.25. Over the next 2 or 3 trading sessions, after testing 56.25, I think it'll come down to, I'm talking of the September series again, I think it'll come down to 55.45.
Sure. So that's your range there. Pramit, coming back to you now, there are lots of factors which really are impacting the rupee. You, of course, mentioned the month-end demand, which is impacting there, but the reforms in India and, of course, the kind of deadlock we are seeing into the political scenario here. The international cues also have been quite jittery. Which one would you be watching out for now for the rupee?
At this point of time, the rupee has more effect coming from the domestic factor rather than the global factor. Because if you look at the European scenario as well as the US scenario, it's pretty much there. We have seen the huge volatility in these markets. But the rupee is recently moving more on the domestic factor, which is a cause of concern. And it seems like that we have to keep an eye on the domestic factor, specifically the current account deficits and the upcoming GDP number. That can give a further idea about where the Indian economy is going and the overall outlook of the Indian economy. That can decide the further course of rupee.
Pramit, also what's your sense coming in for the euro and the dollar index now? Because euro seems to be really taking cues or still seems to be holding or coming back around that 1.25 levels. Expectations of a stimulus still are strong there.
The expectations of stimulus is strong. There are financial reasons for that as well as the political reasons for that. It will be very tricky to understand that where the existing or government structure in the US is trying to go, because there is an election coming in the month of November, and projecting a healthy economy will help the current government to go back and ask the mandate in their favor to the people of the US. So it has become more of a political debate rather than the financial debate. It seems that there will be a package coming, QE3 coming in the US, as well as there will be some sort of stimulus coming in Europe. So overall the effect of both the stimulus won't be driving euro dollar in either direction. But we can see a broad range of euro between 1.23 to 1.26 kind of in coming months.
Dominic, what's your sense on the European crisis that has gone on with a lot of rhetoric but no equal or matching action? What's your sense now on the EU situation and the impact on the euro from it?
Well, clearly the euro situation has been going on for such a long period of time now. We've had many false dawns and we seem to be getting somewhere now, I think. I think the last month or so we've had a number of positive developments ever since Draghi made his whatever it will take comment. I think the only risk now is really that the market's almost got a little bit ahead of itself and we could see a little bit of disappointment at the upcoming ECB meeting. So while we do think overall there's very unlikely to be a breakup scenario in the near term or anything like that, we are a little bit wary that given all the positive news we've had in the last month, we could see a little bit of short-term disappointment.
Vijay, what's your sense coming in for many of these commodity currencies now? Because we saw a run-up in the previous week and the previous one to that as well because of the run-up in commodities. Do you think international markets especially would be looking at that as a more safer place rather than the dollar index?
I don't think in the absolute near term. There might be volatility in the dollar index ahead of the Jackson Hole meet, but commodity currencies tend to be as volatile or a little more volatile than the underlying assets, the commodities themselves, especially industrial metals. I think till the month of August, especially if there is no kind of easing coming in, the dollar will remain a safe haven at this point in time.
Sure. Pramit, the last question to you, and this one again is on the dollar index itself. What are you expecting from the Jackson Hole? What are you hearing from industry and reports from the international markets on whether there is a hint coming in for the QE3?
I think it's about when rather than if that when there will be QE3. So it will be interesting to see the QE3 is declared this side of the month rather than the next month. So it's pretty much expected that there will be some sort of announcement coming from Jackson Hole on 31st of August.
All right. So if not August, then September is where you can expect some more stimulus coming in, as Pramit is expecting you to do so. Pramit, Vijay and Dominic, thank you so much for joining us with your sense on where the currency markets could be headed in the near term. With that, it's completely out of time on hot commodities. Thank you so much for watching.